please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, come 1st of October, e-commerce platforms like Amazon, Flipkart, Myntra and others will have to deduct 1% as tax collected at source before making payments to suppliers. The government has notified the provision part of Section 52 of the Central GST Act yesterday. The GST Council had deferred the implementation of this provision first till the 30th of June 2018. Then, on the back of industry complaining that this would exacerbate their compliance burden, the implementation was put on hold till the 30th of September 2018. And now, with the government notifying the provision, e-commerce companies are worried. The Internet and Mobile Association of India, in its statement, has termed the tax collected at source provision an unfair liability imposition and has warned that it would create operational challenges. To discuss this and more, I'm now joined by Ashish Fafadia, CFO of Bloom Ventures. Also joining us are MS Money of Deloitte India and Prateek of PwC. We'll also be joined by Srijit Mulyal, founder and CEO of True Elements, in just a bit. But let me go across to Ashish first. Ashish, as I pointed out, this is not entirely unexpected. This was already a part of the government's plan and agenda. It has been postponed. The trade body, that's the IMAI, has come out and said that this is unfair, that it's going to further hit the sector. What's your own take?
So, look, this definitely does hit the small entrepreneurs and businesses and even the mid-scale guys. And we are a country where there is a very, very huge market. So if we are going to be talking about any regulation, the fundamental has to be that it has to be making it convenient for these type of traders and mid-size operators to function. So if they want to do something like this, which is okay because they want to make more and more companies and taxpayers under the net and make sure that the violations or pass-outs who end up escaping duties or registrations are brought to the book, that's fine. But then at least they should do it a little more pragmatically. So if the provisions do carve out that there are procedures laid out where below certain thresholds they won't enforce this, and between X threshold and Y threshold they can apply for exemptions if all governance is taken care of. So basically rewarding good behavior and good compliance. I do feel that these are ways and means in which it can be controlled. So, for example, there are TDS provisions also under the Income Tax Act, where the law provides for a procedure where you can go and take an application to the department and negotiate a lower deduction because it hits your working capital. So that one similar thought process or a framework should be factored in a provision like this. And second thing, what I strongly do believe is that the process of refunds has to be very, very quick and smooth without intervention of people. So if you're taking everything online, which is a very welcome step, and if there is somebody who does not, who gets caught in this 1% levy, who is otherwise not supposed to be billed in the first place, then there should be a framework in which he gets the credit of that money or against his other adjustments of other taxes very, very smoothly. This will definitely smoothen out the pain. I'm not convinced that we should, this will completely eliminate the concerns of small and mid-sized companies and traders, but definitely it provides a fair bit of relief if these 2-3 suggestions are considered and made part of the framework.
All right, so smoother refunds will certainly help. But let me bring Prateek into the conversation. Prateek, as I pointed out, this was deferred by the GST Council not once but twice, now finally coming into effect from the 1st of October. We've got industry saying that this is only going to enhance compliance burden, make matters worse. This is unwarranted, not necessary. How would you react?
I agree with the industry on this. I mean, look, first of all, what's the logic of having this kind of a provision? Now, world over, GST is paid by the supplier. Here you have a mandatory provision that if you're selling through e-commerce platform, you are mandatorily required to be registered, right? So therefore, the government has all the details of people who are already registered. Now, if people are not paying tax, then the government, who the data sort of information that they have, can proceed against the supplier. Now, you don't need to transfer that burden to the e-commerce players. Now, what happens from an e-commerce player perspective? Of course, it leads to compliance burden. Also, as per the current provision, they have to take registration in each state. So if suppose the e-commerce platform has office in, let's say, Bangalore, but still because vendors are in all 30 states, they have to take 30 different registrations. Okay, so that is going to be complicated. The second thing is that whether the vendors who are there on the e-commerce platform, many of them would continue to just move out of that because it will lead to a cash flow issue. Like offline vendors are not required to pay this tax, and online vendors are required to pay tax.
Yeah.
So I think there is logic to say that this kind of a provision was not warranted to start with. But then, of course, I think there are revenue concerns of the government which they are looking at. And the second point is that from a timing standpoint, that why the returns are being reworked, the new compliance system is about to come, whether this was the right timing for us to introduce this, or should the government have, should have stabilized the system before coming in. So I don't think this kind of provision is required at this point in time. But hopefully, if they want to introduce this kind of provision, at least it should allow a simpler compliance to the industry.
Simpler compliance and perhaps give a little more time for industry to transition. That's the point that you're making, Prateek. Of course, you also point out, like Ashish, that this was perhaps not necessarily one. Srijit, let's come to you now. What are your specific concerns, Srijit? How is this going to change life for you from the 1st of October?
Hi, Shereen. So, as Ashish has told, our concern is why there is separate treatment for online and offline. And offline, there is nothing like that. Online is much more transparent because everything which comes to my company is through digital transactions. There is a trail of money coming in. You know the PAN number, GST, you have everything much better than offline. So why to only punish online while there is nothing like that offline? That's one. Second is, being an e-commerce player, my 80% of current business is across e-commerce marketplaces, and we ourselves have one e-commerce. Now the issue is, with the helpful to GST, we could go national. Thanks to CGST, we could go national. But there also comes with, as Ashish has told, there's a huge credit which is lying there in GST already, right? Now you're adding another 1% on a monthly basis, and to get the money, minimum will take anywhere about 60 days. That much cash, when working capital is going to get crunched. Third point which I have is also there are small players who start e-commerce, right? There are many homemakers who sell as simple as an apparel online. They don't need to currently have a GST as long as they are not touching 20 lakhs. But those businesses will cease to exist. If this happens, these businesses right now are existing thanks to e-commerce. Now, but when you put some unwarranted clause like this, those small businesses will cease to exist, and businesses like us will have a crash.
Okay, so you're saying that there is going to be an impact, and perhaps a significant impact as far as your working capital is concerned, and it may squeeze out the really small players of e-commerce platforms. But Mani, let me talk to you about the thresholds now. And if I were to take a look at the notification, it says having an aggregate turnover to be computed on an all-India basis not exceeding an amount of 20 lakh rupees in a financial year as the category of persons exempted from obtaining registration under the said Act. Do you believe that the threshold itself is too low?
Yes, the threshold itself is very low, but I doubt very much whether we can do anything for the threshold only for e-commerce, because this is a common threshold which cuts across the GST Act. And if we start having different kinds of threshold for different kind of sections, that's going to lead to a different kind of complexity. One aspect I would like to mention at this stage is Section 52 was objected by all the industry players when it was introduced, when the law was at a draft stage. The government had heard everyone at that point of time. And at that point of time, a lot of wisdom had prevailed in keeping this in abeyance. Now, possibly many of us expected that putting it in abeyance would mean it would never come, or it would come maybe after 5 years. And therefore, at this stage, for us to go back to the provision and say, why does the provision exist, or, why it should not exist, I think that's, not a debate which is relevant at this stage.
That's water under the bridge. Sure.
That's water under the bridge. To my mind, what is relevant at this stage, to my mind, what is very relevant at this stage is, having agreed that 52 is going to live, having agreed that we are going to pay a 1% tax, how do we make it simpler? How do we make it manageable? How do we ensure that this happens with minimum disruption? Because as I have heard everyone speaking, no one is worried about the quantum of the tax because it's just a 1% tax. Now, equating it again to an income tax kind of, withholding is not a fair proposition, because here we are talking of a tax which is on the transaction and not on the profits. And every transaction above the threshold needs to attract, this tax. So keeping that in mind, the fact that companies need to register in every state, make a payment in every state, have to do multiple return filings, have to do
Yes.
multiple reconciliations. Can we do something to simplify all of those and make it easier for business? That, I think, should be the
Fair
focus
point.
of discussion with government at this stage.
Okay, you're absolutely right, and I think there is consensus that the e-commerce industry will have to learn to live with Section 52. It's alive, but the question is, how does one make it simpler so that you don't exacerbate the pain on account of compliance? But we will have to continue with this conversation on a later date, and we will get the four of you back to give us more concrete ideas and perhaps take this conversation forward with the government as well. Prateek, Srijit and Mani, appreciate you joining us here on CNBC-TV18. We'll take a break. There's a lot more coming up. Markets today, very, very volatile. A special edition of Taking Stock, the Fear Factor, to decode today's panic sell-off on the Lal Street when we return.